I'll ask you just right off the bat, because I know you're traditionally more of a player in the Pacific, West Coast U.S., Hawaii, Japan, and even into Mexico, but you just announced a big buy in Orlando, which is definitely not part of that Pacific rim. So what drew you guys kind of out of that core geography there?
Sure. So what we found with Orlando, we'd been developing this thesis for a while, buying these big box resort convention type hotels. We believe that they're really opportunistic at this point in the cycle, A, because they just aren't being built right now. The barriers to entry are way too high. Secondly, they're all brand managed for the most part, and we have very strong relationships, especially given Lee and Steve and Greg's relationships with the various brands. So we have those relationships in place. A lot of times they're capital starved, so they need major renovations. We have the team who can execute on that. And they've all been corporately owned, so there's significant opportunities on the aggressive asset management side to turn these opportunities around. And there's an absolute dearth of buyers for these types of assets when they're especially in the $500 million plus price range. So we've been developing this thesis, and we were able to work with Elliott Management, who are our partners in Grand Lakes, and convince them that we had this niche within the marketplace, and it was opportunistically timed as well. We bought Grand Lakes with them, and we're developing a wider business plan with them around similar assets around the country, which we're really excited about.
Now, what brands do you guys like in that space?
We have really close relationships with Hilton, Marriott, and Hyatt, and work very well with them in those spaces. We own hotels within each of those brands, and they all have major renovations going on. We work very well with existing and corporate management. So it's been a very productive relationship with each of those three major brands.
So what are the markets or the geographies you guys really see opportunities for right now?
Well, obviously our home state of Hawaii, and obviously don't sound Hawaiian, but it is our home state. We are interested in just about any type of opportunity that makes sense for us. We've invested in all types of real estate over the 24-year history of the firm, but going forward we're more focused on hospitality. So most of the islands, but more particularly Oahu, which is where Honolulu and Waikiki are, and Maui are key focuses for us. We love that market. Mexico, we view barriers to entry there as well, because you need the right local partners in order to be successful, and we do have the right local partners in place. And we view the dollarized markets within Mexico as being particularly exciting. So Mexico City, and then the resort markets of Cabo, Cancun, Puerto Vallarta, etc. Within the United States, we love the Smiley States, going from Florida all the way down around Texas, Arizona, and then parts of California. And then we've been investing in Japan for a long time. And while most of our history in Japan has been in the commercial real estate space, we have a joint venture now with Marubeni, and with Marubeni we're raising a fund through City Private Bank for select service hotel investments in Japan. And we've created a dedicated partnership with Okura and Nikko Hotels to create Japan's first select service hotel brand within Japan.
And that's a big jump from the full service big boxes you were just talking about. So what inspired that kind of change of tack there?
Well, when we looked at the Japanese market, again, most of our experience had been commercial real estate. We formed the first foreign controlled J-REIT on the Tokyo Exchange in 2003. We formed a second REIT in 2005 in Tokyo. But as we were watching the tourism trends change over the years that we've been there, we realized that there was tremendous opportunity on the hospitality front. But upon analyzing it in further detail, we saw that the full service end of the spectrum was pretty full, excuse the pun. And the budget end was also, had a really strong pipeline. So we started looking at the select service. So the US equivalent would be Marriott Courtyard or Hyatt Place, etc. But we also started thinking about, well, why do people go to Japan? And it's to experience Japanese hospitality. So we've had a long-standing relationship with Okura, who also own the Nikko Hotel brand. We decided to use Nikko because it has more global reach, and convinced them that we should start a Japanese select service brand, which we've done. And then City Private Bank is raising us the fund in order to capitalize these opportunities. And we brought Marubeni on board because they have tremendous redevelopment and development expertise within the Japanese market. So it's really opportunity driven as to why select service there. We typically would not do select service in the United States, but in Japan at this point in the cycle, at this point in their cycle, it does make sense.
So what's the timetable for that being up and running?
We plan to have it up and running within the next few months. So over the years, we've maintained an office in Tokyo under the name Tozai. It's a full-service asset management company that Trinity founded in 1998. We still have a major stake in that company. There are 31 full-time Japanese professionals that run that office, so they handle everything from sourcing to asset management, reporting, etc., and really work hand in glove with our Honolulu office.
So you mentioned Mexico. What kind of properties are you guys interested in there? I mean, are you looking at the all-inclusive space at all, or is that a little further out of what you want to do?
We will be looking at the all-inclusive space. We're actually we're working on acquiring 2 all-inclusive properties right now. One will convert to regular hotel and timeshare. The other one we'll keep in the all-inclusive space. We find that market segment very interesting. But these, other than Mexico City, these are all U.S. branded resort properties. People always ask me, how do we compete against Airbnb and the like? What we like about the resort market is that you really are resilient to that threat, because people stay with you for the full service offering.
Yeah, it's such a separate thing. I mean, that'd be true of the big boxes too.
Exactly.
Such an incredibly different offering.
Exactly.